Hey, welcome back to Two Super Guys Trade Stocks. I'm Dylan.
And I'm Vinny. And today we're going to talk about the major tech cap earnings for this week. We're going to highlight a few of them that are interested because Dylan and I own some shares in some of these companies. We're going to talk about it. Let's get to it.
Two Super Guys Trade Stocks. All right,
I don't
so this
recognize
is
it.
this is Apple. We're just gonna do like quick points. Keep this a super short video. As you can see, Apple gapped down quite a bit on the far right there, and then went straight up. Just
hmm
just a lot of buying. Right? They didn't like the initial numbers, but just pure buying the next day. So
Yeah, I was kind of surprised by that watching them after hours. As far as highlights from their earnings report, revenue growth 2% year over year, EPS up 16%. Gotta love those buybacks. That's really what they're driving that by. They did report China being down double digits year over year. Someone on the conference call tried to ask Tim Cook about that, and he really wouldn't give any color on either the economy overall or the Chinese economy. I was kind of hoping he would weigh in a little bit more than he really did. He was like, well, we're still like 4 out of the 5 top selling handsets. But they did say that there was going to be a kind of a little bit of a headwind that they would face this year on a comp basis because last year they had a pull forward because of iPhone sales. The channel had to be filled, and they had delay in production last year. So they're kind of battling a bigger number. So that's maybe why the market wasn't so happy about it. This was probably the most interesting thing that they talked about, though. They teased a massive AI announcement for later this year. And Tim Cook really alluded to it being rather large. He said that we don't really get into specifics until it's like time to actually give you the full, details on everything. But he's like, it could be pretty big, is what they hinted at. So that's interesting. And I
yeah,
calculated a little trailing 12-month free cash flow yield for you.
if it's Chat GPT on Apple, super big. If it's what PayPal announced after making a huge thing about AI, and then they just essentially they didn't announce anything, then their stock tanked. So we'll see.
Yeah,
Also, headsets came out. The
it just
VR
came out.
headsets, they look kind of wild. Actually, they
Yeah,
look pretty dope. So expensive.
really cool piece of tech, but does it really matter? That's a different question
Yeah.
entirely.
Google, opposite, they tanked real hard. And then they tanked a little bit more. And it looks like we have a decent bar on volume. It just doesn't really matter because we still haven't gotten above this gap. So Google is in trouble. This
Yeah.
is, and I have a decent amount of Google shares. Did not like this. When all the other stocks that reported earnings that were tech that gapped down and went, they either went crazy high or gapped down and recovered, Google did not. So there's a weakness here.
You know what's really ironic though, because if you look at the trailing 12-month free cash flow yield here, they actually have like they're the cheapest company amongst like the major
Yeah,
tech ones,
they
the
are.
ones I calculated. They did 13% revenue growth. It was rather paltry compared to like what you're going to see out of the likes of Meta, but it's still a significant double-digit number, which is impressive for a company the size of Google.
Yeah.
And their operating margin increased. That's something you saw with a lot of the tech layoffs of the last couple of years, is that these companies have become more efficient and they're generating more profits to the bottom line for shareholders, as resulting in seeing this net income increased 52% year over year, which is a big number.
That's a
Big number.
huge number. More people were scared about the ad revenue aspect. The
hmm
ad revenue was down. That's like the vast majority of their business. So they're like, what's the future for Google? So
Yeah, yeah, exactly.
AMD. So AMD, that white line is all time highs. They
Mm.
gapped down. They were sitting around like, I can't remember, like what is that, 184. They went all the way down to 160 and climbed up over the next 3 days on pretty solid volume. Slightly declining, but
Yeah.
still way above normal. So not worried about all. I have a lot of AMD. This is a hold for me. I also won't sell covered calls against it. I've attempted multiple times, and then it's just not worth it. It's just,
Interesting.
yeah, it's like a NVIDIA. It's too fast.
So it's actually funny that you mentioned that. I didn't really talk about the Apple shares, but my Apple shares got called away a few weeks ago at 190. I then sold a cash secured put to buy them back at 190, which I generated like I think $400 in premium for that. So as long as Apple's above like 186 or so, it would work out for me, which was pretty close to where they were.
Yeah,
But
well, we shall see.
interesting.
So, like I said, the initial dropped didn't matter. So, revenue was slightly higher than expected. The forecast for the first quarter was a little bit lower. That was the big problem. Um, the problem with AMD and Intel and NVIDIA before 2 years ago is that these stocks are cyclical, right? And it kind of goes with gaming, but this is before AI. Take that out. It kind of goes with gaming in that you have these big PC ramp ups or Xbox or PlayStation, whatever, and then they kind of go down. So if you look historically, after a new system, 4 years into that system, for AMD specifically, they have a downturn. It's usually a 4 year cycle. We're at that 4 year cycle because 2020 was the new Xbox. Now, the weird thing is AI butted into this. So yes, AMD revenue, the gaming segment was down 17%, and they expect another double-digit decline, but they're actually still looking at more profit because of this new AI segment. So it's a little bit weird. In October, 4 months ago, they expected $2 billion in server GPU sales for 2024. They increased that to $3.5 billion in the span of 3 months. So
Yeah.
crazy.
I mean, speaking of
Yeah, I
GPU
don't. Yeah.
sales for AI infrastructure here, look at this gap up in Meta, just insane. Especially when you look at the size of the company, this is a $200 billion gap up.
Yeah,
200
and
billion.
this is I should have I wanted to I didn't do it, but I wanted to put another graph in because when you just take out this one day, the other graph looks completely different because it was up so far, it minimizes all the bars. So it looks
Yeah.
like not a lot happened, but if you zoom in, that's 350 to 460 right there. It's
Okay.
crazy.
Yeah, I get what you're saying. Yeah, yeah, it's absolute insanity. We did a separate video on this entirely, but massive revenue growth, 25%. They lowered their cost 8%, meaning EPS surged like 200%, which is insane for a company their size. They announced $50 billion in share buybacks, which they already had $30 billion authorized. So $80 billion in share repurchases are now authorized on a $1.2 trillion company, which is a pretty large portion of the company they're looking at buying back. They announced their first dividend, which I'm not a big dividend guy, but
Me neither.
honestly, in this case, I'd rather see them do that at this point because buying back shares at this price is a little bit crazy to me. But
Is it though?
and yeah, well, look at the free cash flow yield. So theoretically, I think of it as if I'm buying back shares right now, I'm only generating at least a 3.67% return on that, which is yeah, obviously you would adjust that based upon the growth perspective of the company because they have massive growth here. I don't know if they continue to deliver that going forward. 25% is a big, big number as the comps get tougher throughout the year. That was a question that they were asked, and they really kind of didn't give a good, estimation of what their growth rates are going to be going forward. From my perspective, they did increase their guidance for Q1, which is another part of this. I want to say their low end range now is like 34.5 billion in revenue, which the previous like high end was like 34, meaning that they're now saying on the low end they're going to come up above where the previous high end was.
Yeah, I mean
So
that's gross.
that's
We get
yeah,
a full in-depth like 20-minute analysis on Meta. If you guys, we'll link it
yeah.
in.
Exactly. And then this week's big one, we got a bunch of different companies coming out here that'll actually be interesting to get a little taste of where the rest of the market is. Alibaba, near and dear to our hearts, we open on Wednesday morning. CVS is one I've looked at it for a while, and I kind of want to get a little better read on. And then you have McDonald's and Chipotle, which will give you a little check on consumer health, if you will. Those are ones I kind of pay attention to. And
Yeah,
then, of
well,
course, you got your buy now, pay
Chipotle's
later company.
Chipotle is crazy expensive. So yeah,
Yeah.
Affirm's going to be an interesting one on Thursday. But all right, guys, let us know what you think, how you're doing, and what is the best buy out of right now: Google, AMD, Apple, and Facebook. Meta. Sorry, old habits. Bye.